Hey everybody, welcome to Mortgage Today for November 6th, 2023, and oh, what a day it was. UMBS were down 19 basis points at the start of the day. Stock and bond markets steadied after last week's blockbuster rally, with traders still optimistic that the U.S. and European central banks may start cutting interest rates as soon as next year. U.S. futures added about 0.1%, with Tesla Inc. gaining on pre-market trading after Reuters reported the company would produce a new, more affordable electric car in Germany. Global stocks have been finding firmer footing after recent U.S. data pointed to a cooling economy, leading traders to price lower rates by June. 10-year Treasury yields, the benchmark rate for the global cost of capital, edged higher Monday, having slid in recent weeks from a 16-year highs touched last month. The better-than-expected U.S. earnings season and the peak in interest rates may be pointing towards a year-end rally, possibly. Supposedly, macro hedge funds were heavily short Treasuries last week, and that trade blew up spectacularly. This begs the question whether last week's rally was just a technical even that will be erased, or the end of the Treasury bear market for this cycle. The jobs report shows the unemployment market is catching up to all the other data points like ISM, consumer confidence, etc. Home sellers are cutting prices in order to move the merchandise, according to the latest from Redfin. Nearly 7% of for-sale homes registered a price drop in October, which is a record, though it could also be people listing their houses really high because people are overpaying for houses and they want to get the maximum top dollar, so now they're just coming back to reality. Bonds feeling defensive ahead of the auctions? The title of today's recap gets a question mark because it's fairly impossible to conclusively tie today's market movements to measurable motivations. In other words, we don't have any economic reports or standout news headlines that coincide with a bigger push of volume or volatility. Instead, domestic traders simply started selling first thing in the morning and backed off quickly after the first few hours. The rest of the day, essentially 10 a.m. to close, was spent drifting sideways. If we want to jump to a fairly safe conclusion, it would be hard to disprove the notion that bond traders are feeling somewhat apprehensive about this week's Treasury auction cycle because there is a lot of debt coming to market. UMBS ended the day down 34 basis points at 100.50, so down 34 basis points on the day. The 10-year Treasury ended at 4.647, but 100.50, that puts us right in the middle of this range. So we have the Fibonacci floor, which is quickly followed by the 50-day moving average, and a ceiling up here where the 100-day moving average touches another Fibonacci. So hopefully we stay in that range and stay comfortable.